Sorry, folks, just had a little bit of technical difficulty here just all of a sudden, so I apologize. I think the audio is not working either. Hold on, there we go. Perfect. I apologize for all the small little issue. Just all of a sudden got zipped right back out of this thing, so I apologize. So first of all, welcome everybody to the Savvy Investor YouTube channel and our Facebook Live. It's great to see everybody for day 2 of our Raising Capital Investor series. So great to see everybody jumping on. As you guys are coming on, make sure you say hello. Let me know where you guys are coming from or calling from. And let me know that you're here. Always love to see every friendly faces literally from across this country. Okay. So today's session, day 2, we had a great session yesterday. Got a lot of great feedback and comments as well. So a lot of fun. And today's going to be a really good topic, a really important topic, is how to find and present to potential joint venture partners and get that capital for our projects. Really, really important. We're all looking for money, right? That's what we're all here about. So with that being said, this can be a real struggle and a real frustration and very challenging for individuals. Because for those, this is one of the things that really just absolutely sucks. Because they're just like, you know what, I'm trying to find these people. I can't seem to find them. And more importantly, they just don't want to partner with me. And I don't know what the issue is. And I don't know what the problem is. And I want to be very clear. Been there, done that, and totally understand where some of that frustration can feel like, because it can be a very frustrating process. And today we're hoping to kind of help support our savvy investors to overcome that obstacle, because again, I've been through this as well. So I totally understand, and hopefully you can get some clarity to this to help support you guys through this process. Okay. So with that being said, this is a series that we're going to be talking a lot about key fundamentals to raising projects. It's going to be an important piece. And so with that being said, sorry guys, I'm just having some technical difficulty here. So with that being said, these are key fundamentals that we're talking about raising money for our particular projects. So with that being said, we had to break this down in 4 different sections because we'd be here all day long. But I highly encourage you guys to come step by step with the journey with us, because with that, it's going to really help you kind of progress in this process. Okay. So hopefully you guys are able to join us every single session. We'd love to see you guys here live, because then we can get your questions answered. And secondly, this will help kind of provide some of the support that you guys may be looking for. So for those that maybe have missed the last training session yesterday, it is on our YouTube channel. So if you missed it, make sure you follow up, go back and take a listen. With that being said, it should be able to help support you if you guys are needing that support from the very first session. And then today, it is all about finding those joint venture partners and how to present to these people. So that's kind of really what today's discussion is. As a friendly reminder, again, I can see your comments. I can see your questions. Please, guys, respond accordingly. I will do my best to make sure I get your questions answered. It's wonderful to see people from literally across the country here joining us. And thank you guys for being part of this. And again, for those, as a friendly reminder, if you haven't already, please do me a small little favor and take a moment to maybe subscribe to our YouTube channel. Again, as I've referenced, this is one of my objectives that I've got for myself, and to help kind of grow and expand our channel, but more importantly, is provide you with good quality information to help support you guys in your real estate investing journey. So let's get to the presentation. Let's get to the topic at hand. So let's get right at it. So I'm just going to open it up. Hopefully everybody can see this. I'm just going to change the setting a little bit. There we go. Perfect. And so kind of today's discussion is going to be really highlighting how to find and present joint venture partners. And that's today's session. Yesterday is about how a joint venture works and the pros and cons that come along with that. We talked about it from both a money partner's perspective and also a real estate investor's perspective, because there might be a lot of people here that are actually money partners. You might be shocked. But they're also wanting to know who and how, what am I looking for in a real estate expert, and where do I find these people? And that's part of the discussion that we're having today. It's just not real estate experts that are looking for partners. It's actually money partners looking for real estate experts. So again, these are some of the things and some of the criteria you should be looking at when you are looking for each other. And that's the key. We're trying to bring you guys together so you guys can all make this work to work well together for a potential opportunity. So just like anything, we do always, and we will in every session, is put the legal disclaimer in there. This little disclaimer is about raising capital. And before you structure a joint venture relationship, you look to raise capital in any way for a particular project. I don't care if you're the real estate expert or the money partner, always get legal advice before doing so. The content that's being shared today is really based on a lot of my experience and knowledge. I've been doing this for a very, very long time, but it is no substitute to getting legal advice. So I highly encourage you, before you guys get into that journey or start that transition over to raising capital or wanting to work together, just take a moment, get some legal advice beforehand. It can save you guys a pile of headache and trouble maybe down the road. And again, highly, highly encourage you, take this information, process this. You guys definitely can execute this, but always get legal advice in advance before you proceed with anything. Okay, so with that being said, let's get to the topic. And how do I find these joint venture partners? And again, this is the million-dollar question. Where are these people and what should I be doing to try to find these individuals? Okay, so I'm going to pose a question and you guys can share and answer this in the comment section below. There's a question is, and this is one that tends to come up quite a bit, and I hear it a lot. Should you buy a property first and then find the money partner, or should you find the money partner first and then the property? So which do you think should be the situation? Share this in the comments below. I'd like to hear everybody's perspective and get a sense of this. This was a post that we did on the Savvy Investor Facebook page as well, and we got some pretty interesting responses. So which comes first? Is it the property first or is it the money first? And so that's my question I'm posing to you. There is truly no wrong answers. So I want to be very, very clear. This is all about sharing a little bit about your experience and your knowledge. And even if you don't have the answer, it's okay. So Cheryl's referencing it's the money partner first, then the property. That's great. Awesome. Okay. So it's kind of like that saying, and a lot of people have seen this before. It's like, is it the chicken or the egg? So it kind of is very, very similar to that specific fashion. Okay. And like I said, there's going to be a lot of differences of opinions here. Because some people believe this old saying that tends to come around. It's like, you know what? Find the property and the money will just come. And you know what? That can be true. But with that being said, if you've got a property under contract and you're trying to push forward, it does put a lot more pressure on the real estate expert because they are on the clock. You got an offer accepted, you're on the clock. And now instead of focusing on kind of more due diligence processes, you're focusing and kind of panicking a little bit, or urgency in regards to raising money. So instead of spending the time doing your due diligence on inspections and financing and all those other really important things, the focus that you're all frantically kind of doing is trying to raise money. Okay, so that's kind of the process that tends to happen when you've got the property first and not the money. And what happens is there's this kind of panic approach to this, is that you're frantically trying to get all this stuff done beforehand. But really think about it. If you are imagine you're about buying a property, but you've got all the capital already lined up. You now know the type of projects that you can acquire. You can rest assured that that pressure is no longer on you in regards to trying to raise money. You can really put some attention to just focusing on the deal in itself. Okay. So once you know how much money you have, it does provide you with a little bit of a relaxed feeling. Okay. So from my perspective, and for me, I've been doing this a long time, I've always found that it's much, much easier to raise the money first and then find the projects, because like I said, you just never know when things are going to happen. And the last thing you want to do is not have that reputation that you're not able to close. Okay. So the key is secure your capital first. And that's my bit of advice. And it's something that I learned a long time ago, as I heard the saying before, get the property first and the money will come. And you know what? It didn't really work out so well for me. And so for me, I just felt so much better about having the money, having it ready to go. And then the more important part is you just never know if there's any shortfalls that come. All of a sudden, a joint venture partner no longer wants to proceed forward, and now you're in a short position yet again. So take the time to raise the money first and foremost. And by doing so, you're not going to kind of feel like this individual that's going to be kind of chasing this money. You've got the capital lined up, and then now you can go shopping. You know the type of projects that you can be focused on. You know what the budget is. And more importantly, because you've had that capital, that's just not that scrambling situation that a lot of investors kind of go through, because they're just trying to lock up this property, getting it done, and then at the same time trying to raise money can be a really frustrating process. Okay. Now, if you flip the coin a little bit and you're chasing the money, like I said, what happens is when you've got a property locked up and now you're trying to attract money, there's this kind of this sense of uneasiness of yourself. And what happens is this actually does tend to come out in regards to your presentation, a little bit of a kind of desperation in some cases. And believe it or not, for money partners, this is not a really appealing thing. Where if you've already if you don't have a property under contract at that point in time and you're just raising money, you're a little bit more at ease. You have the opportunity just to be relatively calm, because you know that you don't necessarily have a deal at the moment, or your focus is specifically on the partner, making sure you're finding the right partner versus going the other way around, where you've got a property first and now you've got kind of the stresses of raising that money, and you can be becoming a little bit desperate, and the people that you are partnering it with as money partners and real estate experts may not be the right fit. So I want to be really clear. This is where you can make a lot of mistakes in multiple different ways, is because you're desperate to actually find that money. You're partnering with maybe the wrong people, because you are maybe running out of time, or you just don't have the adequate time to do your due diligence. You could be making decisions that are going to impact the deal in itself as well. So I highly encourage you guys, and this is just based on my advice, take the time to raise money first. It'll be a much better option for you down the road, and it'll make you a better investor for sure by doing so. Okay. So there's a reason why a lot of people want to do the property first versus the money. So I'll ask the question, why do people go and buy a project or secure a project, get it under contract, and then go hunting for money first? So that's my question to you. Why do you think people do this versus actually trying to raise money first and then trying to find the project? Go ahead and share it in the comments. I'd be interested to hear what everybody's perspective. But it is very common. You see it out there constantly on social media. Got this property under contract, now looking for money. So why do people do that first versus the other way around? So I'll leave that there as a comment. But the answer is really, really simple. It's a lot easier to get the property under contract versus raising money. So this perception is, you know what? It's just a lot easier. There's this kind of whole analysis paralysis that actually comes in along as well, because the real estate experts feel like they're actually being productive. They're getting the property under contract and they feel like they're moving things forward along. But more importantly, what tends to happen is they just feel like they're progressing, but they're not. And then they got this horrible vicious circle that actually kind of happens constantly, is that they're always securing properties, but they're just not able to raise the money because the pitch is not necessarily working well. There's a little sense of desperation that tends to happen. And so all of a sudden things just tend to unfold. Okay. So in a lot of cases, I'll share a quick example. I've got an individual who is a Savvy Investor member, and he reaches out to me constantly, but he always reaches out to me in more of a panicked approach. He's like, Mike, I've got this investment opportunity. I'm trying to get this thing locked up next week. I have to remove conditions or else I'm going to have to walk away from the deal. But I get this call constantly. Okay. The guy's an amazing individual. I love his hustle. I love his aggressiveness. But every single time when I listen to his pitch is always a sense of desperation. Now, I always comment to him, I'm like, listen, take a step back and stop looking at deals and take the time to raise money. And by doing so, you'll have a lot more success in getting those contracts secure, or those properties secure. Okay. I've told him this multiple times. Then the following week happens. I get yet another phone call saying, Mike, I've got this investment opportunity. I need to remove conditions by next week, and I need some money. And so this is, it's a vicious circle that constantly comes up. So why do you think he does this? Why doesn't he start with the money first? What's the reason for that, other than maybe thinking that it might be a little bit hard? Okay. The biggest thing that I tend to see from a lot of people is this. The reason why a lot of people want to focus on the easy stuff first and foremost is because it's just so much easier. And the reason why they don't want to focus on the hard stuff, especially when it comes to the capital raise side, the concern that they always have is the fear of rejection. Nobody wants to feel rejected. And again, I want to be clear, this is not a rejection of you personally. This is just maybe a rejection of your deal. And so with that being said, or a rejection of you personally, just a rejection of maybe the way you're presenting yourself. And so this is a big fear for a lot of people. And this is for a lot of reasons why people just focus on the deal first, because it's so much easier and they're not going to get rejected in this specific way, right? So when real estate investors or real estate experts are feeling this is the reason why they get into this vicious circle. And as that old saying goes, doing the same thing over and over again and expecting different results. And this is where a lot of investors tend to get stuck. And if this is sounding a little bit like you, and it's not working, you just need to change the way you are doing things. Because if you want to be successful in this and you're constantly hitting a brick wall constantly, and you're finding yourself, I'm finding these deals, but the money's just not coming, chances are you're just positioning yourself because you're just focusing on the wrong thing first and foremost. Find the money first. It'll make your life so much easier for you. And so the way to do this, guys, is it's about getting out of your comfort zone. And when I say that is, it's going to force you guys to get out, start doing a lot of networking and engaging and connecting. And it's really positioning yourself much, much different. And I want to be really clear. It's not about you to network with other people for you to pitch deals and to sell to people. That's not the objective here. What you are selling as a real estate expert is yourself. And so what the money partner is trying to determine is this the right person for me? Am I compatible with this particular person? If you go out there with an approach where you're just trying to sell on an investment opportunity, there's a very good chance they're going to be kind of poo-pooing on you. They're just really not interested. And it's feeling like a little bit of a multi-level marketing kind of scheme. And there's nothing against that. But again, there's always that perception of really hard selling, aggressive approaches to that. Okay. So again, it is about selling yourself. And the key that I want to highlight is you do need to get comfortable being uncomfortable. A lot of people are just feeling like, I don't like to network or engage. And that could be a really difficult thing when you're trying to raise money. So the key that you want to do is really want to introduce yourself. You want to let people know who you are. And more importantly, what is it that you do? And so by saying this, it is an introduction. And so you may have two different careers right now. You may be a dentist or a chiropractor, and on the side, a real estate investor. But when you are at an event or at a social gathering or something of that nature, introduce yourself as a real estate investor, because this is a business for a lot of real estate investors wanting to expand and grow. They're hoping to maybe make this as a career. Post on there if this is something you guys are looking to do as a full-time career. I'd be interested to see who is looking to do that. Okay. And the key, guys, here is to be comfortable being uncomfortable. You got to get out of your comfort zone and being able to engage and network in a much more aggressive capacity. And you can never have enough relationships. This business called real estate investing is all about networking big time. And the more people that you know, the more success you're going to have in this game called raising capital. Okay. So the one thing you may have heard is talking about your elevator pitch. And when I say, and I don't like the terminology pitch because it's not really a pitch, it's really your 10-second introduction. So for those of you that are just getting started, this may be something relatively new. So when you are at a barbecue or something of this fashion, it's the summertime right now, lots of barbecues and lots of dinners and all that wonderful stuff. And you're meeting all these new people. And the one question that is always going to come up is, Mike, nice to meet you. Tell me a little bit about yourself, or what is it you do, right? That is always one of those questions. What is it that you do? Well, that is your 10-second introduction by introducing yourself as a real estate investor. Well, actually, I own a real estate investment company where I buy and manage investment properties with investor clients with the intent of making profit. So that's just something that I just wrote up as well for this as one of my introductions. I own a real estate investment company where I buy, manage investment properties with investor clients with the intent of making a profit. From that point, I don't really say much more. And then if they like question, they're just like, well, what is it? Tell me a little bit more. Then they've given me permission to talk a little bit more. I don't talk about investment deals. I don't talk about investment opportunities. I really just talk a little bit in a very casual approach. And if they want to know more, or they're looking to maybe wanting to work with you, they will say, hey, Mike, I'm really interested. Could we maybe set up a time to connect and meet? Absolutely. Try to take it away from that barbecue setting or that social setting. But more importantly, you're trying to not do this big selling approach. In a lot of cases, my advice is stop selling, throw it out there, let people understand what you do and who you are, and then back away. Let them start to try to dig some of that information from you. And what it's doing is you're just dangling that carrot and letting them chase that carrot a little bit further. Okay. So my recommendation, if you haven't yet, work on your 10-second introduction. And it shouldn't be a big selling approach to this. It's really an introduction of what you do, who you are, maybe a little bit about where you're investing in. But again, 10 seconds. It should be really quick. Hi, Cheryl. Nice to meet you. Tell me a little bit about yourself. What is it that you do? Okay. Now, secondly, for those that are actually looking to raise money, so these are the real estate experts that are out there. If this is something that you are striving to become as a full-time investor and you want this to be your full-time career, I'm going to challenge you guys. If you haven't already, I would definitely make sure that you have got a real estate investor business card. If you don't have one, get one. Okay. The pandemic, is it over? Is it not? That's questionable. But at the end of the day, everything is starting to kind of open up. And in this day and age, we are connecting with people. We are networking with people. So make sure you take the time to have a much more professional looking business card for yourself. Lots of different companies, and I'm not there to promote them, and I'm not being incentivized by these companies, but like Fiverr and 99 Designs, just to mention a couple of them, they can design your cards for like $100 and you can get them printed relatively cheap. It doesn't need to be the fanciest cards of the world, but at the end of the day, you should have a business card representing yourself in regards to what you do as a real estate investor. So in a situation where you are meeting people at a barbecue, at a social setting, and they say, do you have a card? The last thing you want to say is I don't have one, because it's a little bit embarrassing. Secondly, the other thing, and again, technology is controlling us big time, and we're very, very heavily dependent on technology. Make sure that you've got your profile set up on your contacts. And again, if you don't have a business card, it's set up properly here, and you can just share or airdrop or send them an email with your contact information. And then this way they have that information there for yourself. So there's a couple different strategies that you want to do. Is again, you are representing yourself as a real estate expert. So present yourself accordingly in that way. Okay. So again, it's not about pitching the deal. It's about taking the time to let people know who you are, what you do, and really pique their interest of getting involved in real estate investing. But again, those are the moments that you're not there to pitch the deal. It's about letting people know who you are. And more importantly, is there collaboration? Is there some commonality between the two? And that's really, really important. We don't want to be in a position of desperation when we're trying to raise money. We don't want that to be presented out that, you've got a property under contract and you're at a barbecue and you're looking for $50,000 and you are absolutely hammering these individuals trying to get capital. That's not the best way to raise money. How do I know? Been there, done that. Okay. That does not work. And if you guys missed the session yesterday, I shared a little bit about that as well. Okay. So let's get to the real question now. So where are these joint venture partners? Where are these money partners? Where are these real estate experts? Where are these people? So where do you guys think they are? That's a question to everybody. Okay. Who wants to know where the treasure map to all of the money partners is? Anybody want to know? Does anybody really, really want to know? Because it's a real secret place, really, really secret. And if you answer this, you've got it right. Okay. So the reality is they're everywhere. Okay. They can be at different seminars and workshops and, the workshops. They are family members. They are friends. They are church groups. They are social media, obviously a big one. I referenced barbecues, kids events. Cheryl even just put reference me. She's right here. She's networking right now within the within the webinar itself. But absolutely, again, network to your heart's content. But they are everywhere. And for myself, even, and I'll share a quick story. I remember I was at a seminar one time, and I wasn't there to really kind of learn. I was actually there to network. And the seminar was based on real estate investing. And I sat down and I was able to meet this gentleman that sat beside me. And before the session started, we had a lot of great discussion. Again, not pitching, just talking. And I'll tell you right now that from that meeting that I had, or from that session, just going to a seminar with no intention about it was really networking, not necessarily about selling myself or anything like that. I was able to connect with this one particular individual. And we set up another meeting shortly after, and he has become one of my largest joint venture partners to date. He's got roughly over 20 properties with me just from sitting at a seminar. You'll be surprised of where these people can be. And by just having some open dialogue, sharing a little bit about your experience and knowledge, it's amazing what you guys can accomplish just by doing a little bit of networking out there. But literally, joint venture partners are everywhere. I do this introduction when my son was playing hockey. Actually, we'd sit up on the stands, freezing our what's off, and we're just standing there. And again, introducing myself to new parents, new team, all that wonderful stuff. And all of a sudden, again, what do you do? Sharing a little bit about myself. And all of a sudden I piqued their interest. And now they're wanting to partner up with myself just by sharing information about some of the things that I'm looking for. So guys, they are everywhere. So the key to this is try to make your discussion about real estate investing. So if you're out there at the barbecue, or if you're out there at a social gathering or an event, discuss real estate. It's an easy topic. It is a hot topic right now. Everybody and their dog is talking about real estate right now, be it inflation and interest rates and prices going up and prices going down. So it's an easy discussion to have. Okay. So here's your opportunity to stand out from the crowd by sharing a little bit about your business, sharing a little bit about your knowledge. And it's not supposed to be about arrogance or selling. It's about just providing information that you've all taken the time to learn. And you just never know when partnerships can kind of come about. Okay. So the next question is, okay, you've gone out there, you've connected with people, you're networking with people, but where should I start my connections with potential joint venture partners? I don't necessarily know who to go with. And there's kind of the old saying is, really understanding your target market. And for those that are just getting started in raising capital, friends and family are probably where you're going to start. Okay. And friends and family, here's the thing, people are wanting to invest in you. It's never the deal, it's in yourself. And what they want to know is, can I trust this individual? Yes or no. And so with the friend and family, they already know who you are. You may already have a great personal relationship with them. So there's a sense of confidence that's already there. Okay. The nice thing about working with friends and family, again, it's personal relationship. It could be much easier to sell to the person or work together with the person on a potential deal than maybe some stranger specifically. You don't have to incur a bunch of marketing expenses if you're just getting started as well, like, a website and, say, for example, email list and all sorts of different things. So you may not necessarily need to go down this road right away. So that is a great place to start as friends and family. Now, there are some disadvantages with friends and family as well. They know who you are. So they will remember what you did to them when they were 6 years old and all that stuff, right? So again, that's one of the disadvantages as well. With friends and family, they're also looking for the friends and family discount, of course. So again, in that situation, you got to be kind of prepared for this. In addition to that, it can also strain relationships. Again, you might have family members that get a little bit jealous about what you're doing. And all of a sudden it just adds a little bit more pressure. And even more so is every time you're at a family function or a family event, they see you there, they're always going to want to talk about what's going on with their investment deal with you. So be aware of that. That does tend to happen. So this is where most investors start when they start raising capital. Okay. So the key is your inner circle will be your easiest source to raise capital to begin with. It's very, very common that people go with friends and family first. Much easier. They will most likely have a lot more success. Your job is to really provide a little bit of convincing that you know what you're doing, but it shouldn't be as difficult as the next two groups that we're focusing on. Okay. So once you kind of exhaust that list, the next one that you're probably going to be going through is referrals. And these are referrals from your friends and family. So in a lot of cases, they're still somewhat an acquaintance to you. So I think I'll challenge everybody. At some point in time, you've asked for a referral for something. Maybe it's a mechanic of some sort. You've asked a friend, hey, do anybody know a good mechanic? And the reason why you're asking a friend if they know a good mechanic is because you trust your friend and maybe they've got a good relationship with them. And then by using that individual as a reference, you have a lot more confidence versus just going to the yellow pages and just finding a mechanic. Okay. Same principles lie here as well. There's an acquaintance to you, and there's a lot more credibility than just kind of opening up the phone book looking for a real estate expert. Okay. So ask yourself, is there, if one of your friends and family are not interested, or if they are interested, again, let them know what you're doing. Share what is it you're doing and what you're looking for. And don't be afraid to ask friends and family for any references or referrals. So when that discussion at maybe another event happens, and guess what? Real estate investing discussions happen, and they're just like, yeah, I'm thinking about buying an investment property. That your friend or your family member will say, hey, you should actually talk to Mike. Mike is a real estate investor. We were at an event not that long ago, and this is something he's actually getting into. Here's his contact information. He just airdropped it to me. Let me airdrop that to you. Okay. So this is yet another way to create that relationships. It's that not the inner circle, but just expanding that a little bit further. Okay. So some of the disadvantages here, it definitely requires more work than a regular friend and family, because again, you need to build that relationship, but it's not as difficult as strangers. There is that referral attachment with your friends and family. Okay. So it may take a little bit more convincing than your friends and family, but it's probably not going to be as difficult. Okay. Your marketing expenses probably still not needing to be a lot more in regards to websites and other different types of things. But again, talking to your friends and family, letting them know what you're doing. And then more importantly, if they have any friends or family or if they have any referrals for you, just to let them know what you're doing and to have them reach out at any point in time. So again, start with your inner circle. Once you've kind of tapped that one out a little bit, then you expand a little bit further with referrals. Now, the next one is going to be new relationships. Okay. Now, there are advantages to this and disadvantages to this, no different than the other two. So with the advantages, again, this is a brand new relationship. It is definitely considered much more of a business dialogue versus a family and referral. So in a lot of cases, maybe you're connecting through social media. Maybe you're connecting just at a barbecue for the first time or at a social function or whatever the case may be. Brand spanking new relationship. Okay. It's going to be a little bit easier to present, believe it or not, because there is no attachments, no personal attachments, no family attachments. So it's okay to make a mistake with a new relationship versus a family member, because if this doesn't go so well with their new relationship or the presentation didn't go very well, no harm done. You can always move on to the next person. Okay. So there's no risk of any relationship damage with the new relationship, if that makes sense. Okay. Versus a family member. Okay. So with that being said, there are some disadvantages. There's definitely more costs associated with this, more timely. They require more time and attention, and they'll probably take some time to think about it. But now you've got to do a real good job to really sell yourself and why people will want to work with you versus somebody that actually knows you. So it does take a lot more time with a brand spanking new relationship. This is where you're networking like crazy. And really at the end of the day, this is where you got to put a lot of your attention and focus. So if you find yourself that your inner circle is tapped out, I'm going to challenge everybody. Take a real good look. Have you communicated with your friends and family what you do? Have you told them that if there was somebody down the horizon that was talking about real estate investing or is interested in real estate investing, to let you know, because you just never know when those opportunities come. So it's important to talk about it. It's not about here to sell, but make sure that they know what you do, because you just never know when those individuals will want to work with you. Okay. Once you've exhausted that, then you really need to spend some time in regards to expanding your new relationships. So networking events, getting involved in social media, even events like this. I love seeing people here already and talking and socializing where they're from and all that wonderful stuff. It's great. This is a great way to kind of connect and network. You just never know. Okay. And at the end of the day, the whole focus here, it's about building that commonality, and the focus is we're all trying to be profitable together. We want to, as we discussed yesterday, we are trying to use each other's benefits and resources to come together with the advantage with the opportunity where we're all going to be profitable together. Okay. So the one thing I also want to highlight, you've got your inner circle, you've got your referrals, and then you've also got your new relationships. It's really, really, really important to be very, very clear with what specific things you are looking for. Okay. So it's really, really important. And I want to be, again, crystal clear. As a as a money partner, you should have clarity of what you are looking for in a real estate expert. So what are those things that are on your checklist that is important to you to work with a real estate expert? Now I'm going to flip the coin, and this might be a little bit of a surprise. Real estate experts, you should have a checklist as well. What are the type of people you are looking for in regards to being a money partner? What are those things that you are looking for? So let me pose the question to all the money partners. Let's start off with the money partners first, okay? What do you think are some of the most important things that a money partner is looking for in a real estate expert? What are some of those key things? So write them down, post them on there, see what you guys are going to come up with. Okay. Secondly, I'm going to ask everybody is, what does a real estate expert want? Okay. So think about the situation. So you are a real estate expert. You are a real estate expert. Tell me a little bit about what your ideal money partner looks like. What are you looking for in a money partner? Okay. So let's ask the question. Okay. So what is it specifically you are looking for from a money partner? You got experience and money. Letitia, thank you so much. And I'm assuming that is from the money partner side. Okay, so you're looking for experience and money partner. So with this being said, these are some of the key things as a real estate expert you are looking for in a money partner. So for those that are money partners on the call today, just be aware. These are some things that are important to us real estate experts, okay? Obviously, they want to know, as a real estate expert, do you have the capital to fulfill the obligation of this investment, yes or no? And more importantly, and guys, write this one down if you've got a money partner that's only got like $50,000 and that's all the money that they have, I would challenge you that might not be the right partner, because they're one situation or one challenge away from a potential phone call to you saying, guess what? I lost my job, Mike, and now I'm going to need that money back. That's not an ideal situation. So you want people that have got capital, and that's really, really important. So hopefully, as a real estate expert, one of your criteria that you're looking for is it's not their last $50,000. They've got more capital just in case, and they're not going to be in a desperate state in case something happens. Hey, there's lots of stuff happening right now with inflation and all sorts of different things. Okay. They also have the ability to qualify for a mortgage. So for those money partners, you know what? That's the game. And we'll talk more about structure next or tomorrow. But it is about the qualification process of mortgages for single family properties. Okay. So do they have the ability to fund the deal? Do they have the ability to fund the deal? Do they have more than $50,000 to do this? So again, it's really, really key that these things are highlighted and communicated. Okay. In addition, and this is another one, do they have similar visions, similar goals in place as you? Okay, because that is really, really key. If their objective as a money partner is, hey, I'm looking to 100% return on my investment in the next year, is that something that you're able to fulfill or not? Okay, so you got to be honest with yourself when you're asking those questions. Okay, and then more importantly, that they're considering this as a longer term investment and not needing to pull the money out right away. Really, really key. Okay. So, in addition, as a real estate expert, I want my money partners to be passive. And this is a good thing for them too. They don't have to worry about the day to day stuff, is that they are letting me do the work. And I'm looking for trusting relationships, quality relationships with my money partner so they have confidence in what I'm doing, and then we can make this a really good relationship between both sides. Okay, so there's a couple things here. So looking for investor partners with reputation, plan B, resources, and experience to handle situations. That's awesome. That's really, really great. But those are all the things that you definitely want to be able to be looking for. So that's great. Thank you for sharing. Okay, so let's kind of talk a little bit about, now we've talked a little bit about the real estate experts and what they're looking for in a money partner's perspective. Let's kind of flip the switch a little bit. What do you guys think a money partner is looking for? So I asked everybody to kind of start writing some of those things down. What are money partners looking for in a real estate expert? And I'll be interested to hear what everybody's kind of comments and feedback is in the comments, but go ahead and post accordingly. Okay. So what are those questions? What are some of those things? And this is really, really important because this is kind of getting to the nuts and bolts of what these guys are looking for. And this is really, really key. Okay. So what do you guys think is really, really important for money partners? Okay. So I'll let you guys kind of start typing some of that stuff in and I will just post accordingly. So this is something that I have asked many of my students and people and attendees that have been to my webinars in my past, is this particular question. What are some of the most important things that money partners are looking for? So put your money partner hat on. And what are those things that you are looking for as a money partner? And this is actually done in sequential order in priority. Okay. So based on voting. And I've done this for years and years and years, and it's almost exactly the same perspective. Okay. So if you guys take a peek at what this is, again, the first one is trust. Trust is the number one. So the money partner is wanting trust in you, not trusting you with their money, that you're not going to go to the Bahamas with their capital. So the number one thing that you as a real estate expert is selling is trust, is you are needing to convince them that they can trust you with your money. They are looking for integrity and honesty as the second piece. So for you real estate experts, I highly encourage you guys to write this down because these are the things that are really important to money partners. Do you have a business plan? What is your overall entrance strategy? What's the strategy going in? And here's the other side. What's the exit strategy going out? Have you got a very clear plan with your investment strategy? And I'm not talking about the deal. What's your overall strategy as a real estate investor? So again, trust is number one, integrity and honesty is number two. And then what is your business plan? Track record and credibility is also another big piece. Okay. So again, what's your track record? If you have one, and if you don't, that's okay. You just have to be able to sell those first three parts first. And if you've been able to do that successfully, you know what? They really will look at your credibility and they're trusting you. They will most likely want to proceed because those are the three that are the most important, more than anything. Okay. Management, if it's yourself self-managing or your property manager, or how do you manage your overall investment with this person? Can they have confidence in you that you know what you're doing and that you're going to be able to do the things that you say you're going to do as part of your transaction? Security, so they're going to, again, how are you mitigating risks? What are some of those risk issues that may come up, and how are you mitigating it to the best of your ability? And that is actually part of your business plan that you need to be able to share. As money partners, we're looking for a common vision. We want to make sure that we're working with the same people that have very similar visions and similar goals that we have. And so they want to be able to see. Now, this is the one really interesting part. that a lot of people struggle with, especially when it comes to getting started and raising capital. Number 8 is actually the return on investment. Okay. Number 8. And what I have found in my experience is if you've been able to honestly build trust, integrity, and they believe in your business plan, yes, return on investment is important. Okay. But it really is just a budget that you're presenting. It's not something that is 100% going to accurate. You're going to budget what you're hoping to achieve based on this project. But for a lot of investors, they want to have confidence that they know that this is an investment. They know that there's risk associated with this, but you're going to do everything you possibly can to make sure you're going to provide a good return. You're going to work really hard. And more importantly, that they can trust you that their money is safe with you. So it's interesting how people really flip it and really present return on investment first versus all of these things. Okay. Last but not least is financial tracking. So do you provide statements on a regular basis? What's the communication strategy? And by doing it in this way, they make them feel comfortable that they are part of the process and they have some visibility to the transaction. So guys, this was my aha moment for me. And if you guys checked out the video last night or were part of this yesterday, this is where I struggled. And I shared my story with you guys where I presented to my wife. And she's like, when are you going to talk a little bit about myself and my goals and things for me? And this was really my aha moment. And it was just like, I need to stop selling the deal and focus a little bit more about having an understanding with what my partner is and what they're looking for. And for me, that was the biggest thing. And all of a sudden, once I've learned to adapt a lot of those aspects into my presentation, it made all the difference in the world. So guys, for those of you that are trying to raise capital and are struggling, this is the secret list. This is it. This is what you're selling. And so don't start pitching return on investment when it's the number 8 priority, when they're really trying to determine, can I trust Mike with my money? Yes or no. And once you've overcome that huge hurdle, the rest of the presentation should go relatively smoothly. Okay. So we've kind of talked a little bit about where to find joint venture partners. What are money partners and real estate experts looking for? And I want to be really clear. Make sure you take a moment to interview and screen these individuals to making sure there's compatibility between both sides. It's not just a one-sided game where they've got $100,000 that you should immediately be working with them. They may not be the right fit for you, Mr. Real Estate Expert. So be cognizant of that. Is that person the right fit for you? Yes or no? Okay. So with that being said, comes kind of the next part is you've met these individuals, you find that there's some commonality there, and now you're going to be talking a little bit about the presentation. And so you may be in a situation where you're at a social event or a barbecue, whatever the scenario is, and now you're about to meet these people, maybe first and foremost. And with that being said, it shouldn't be this big formalized presentation. And again, formalized presentation. And as I kind of shared with everybody yesterday, I had a 40-page binder, which was just insanity. And my presentations did not work. It should be a very informal discussion, really relatively simple. And again, that's the way it needs to be communicated. So if you guys got these big, massive binders with statistics and research and analysis, you're probably going to lose them really, really quickly. Again, understand what they're looking for. And the way to build that trusting relationship, that openness, is by talking, socializing, getting a chance to know each other. Okay. And that's the real key. Okay. So here's a few tips that I recommend. And this is kind of a structure that I share with a lot of my students. We're not going to go into so much detail as I do with my students, but this is kind of the layout of the land when you guys go out to present. And so with this being said, the first thing that you tend to start with, and this is kind of your presentation, is you do want to take a moment to get to learn about them. It's like going on an absolute first date. I want to know who the person is literally across the table. So it's all about the opportunity to connect with people. So the first thing is, it isn't about you, Mr. Real Estate Expert. It really is about the money partner. And so with that being said, it's about making sure you ask a lot of really good questions. get a chance to know what their goals are, their vision, what they're trying to accomplish, and doing some of those things. So this is kind of the sequential presentation deck that I present to a lot of my students, and I'm just kind of highlighting some of the things with everybody today. But it does start with questions, and some of the questions you want to ask is, do you own your own home? Do you have capital available? Is it the last $50,000 that you have? Yes or no? So you want to determine, the type of capital they have right at the very beginning. Okay. Where do you want to be in 5 years? What are those goals that you have? Financially, what are your investment goals? What is the experience you've had so far? Has it been positive? Has it been negative? Have you been investing in more stocks or mutual funds, or have you done real estate in the past? What's the reason you're choosing real estate as an investment option versus anything else today? And this is a good question for us real estate experts and asking these money partners, what is a good return on your investment? What are you expecting? What are those expectations that you have? And I'll tell you, there's a lot of people that I'll even meet myself, and they're like, I'm looking for a 30% return on my investment year per annum. And I comfortably say that it's not something that I can ever guarantee or promise. And I would never commit to that at the very beginning, because that is just not something that I would be very comfortable presenting. And if that's what you're looking for, I'm happy to kind of walk away from this and just stop the presentation now, because I know I'm possibly going to disappoint you, which is not something I want. If you're looking for something with more guarantees of 30% return, you're better suited to go somewhere else. So you can have that dialogue right off the bat. And as real estate experts, you got to be honest with yourself. Can I accomplish the things that they're asking for or they're responding to accordingly? Because if the answer is no, then you really got to ask yourself, is this the right partner to be working with? Because if you can't achieve what they've set in place, they're probably going to be very, very disappointed. So again, it is about commonality. It's about compatibility and making sure it's the right fit. So get a lot of these questions answered. Again, at the very beginning, it's all about them. Understand what is it they're looking for? What are they trying to accomplish? And more importantly, are they looking to take immediate action, yes or no? How serious are they, or are they just kicking tires? And there's a lot of that too, right? So again, it's getting that clarity right from the very, very beginning. So you know the type of person you're working with. And more importantly, is this a person that you can work with, yes or no? Okay. So that's the first step, is your money partners questions and getting those questions answered. Secondly, and these are the next sequential order that I tend to communicate with our money partners, is, this is now, once you've got your questions answered, it's your opportunity to share a little bit about you. And when I say that, it's not your opportunity to start getting into the pitch, into the sale or anything like that. It's sharing about you. What is your why? What are you trying to accomplish? Why did you get started in real estate investing? Why are you doing what you're doing today? Share a little bit about what your journey's been. And again, this is that time where it's like a date. You guys are getting the chance to know each other. So it's not about the next investment deal. They want to know the person behind the investment deal. You are selling trust, credibility, and that's what you're trying to accomplish here with this compatibility. From that point forward, as they start to ask questions about you and you guys are engaging in this type of fashion, once that comes to conclusion, now's your opportunity to share a little bit about your plan. What is your investment strategy? What do you focus on? Well, I focus on BRRRRs in the Calgary marketplace, or I do fix and flips in Vancouver or Victoria. Share a little bit about what your investment strategy is. And more importantly, why? Why have you chosen that strategy versus any other? Do you feel comfortable sharing why you've chosen that? Do you feel comfortable in talking about what your strategy is with your potential money partner? It should be crystal clear. Yet again, they want to have confidence in you. They want to trust you. Are you credible? Those are the things that they're looking for. You don't need to be sharing a deal. You're just talking about your investment strategy, so they have confidence in you. Okay. Next is really about a typical joint venture split. You know what? This is always the one that gets people stumbling all over the places. The 50-50 split. And the important part is it's important to have that dialogue. Let's not surprise them at the end when you're about to close on the deal. Communicate this. You do need to provide that information of whatever structure you have. I'm going to talk more about that tomorrow session. But again, this is your opportunity. Talk about what the structure works, what the structure looks like. You are bringing resources as a real estate expert with experience and knowledge. The money partner is bringing in capital and possibly qualification of the mortgage. And by combining forces together, you guys can both mutually be successful together. Once you kind of conclude and you presented all 4 points, and if the investor, the money partner is feeling comfortable, ask for the sale. Don't be afraid and say, what do you guys think? Or is this something that you want to work with me in? Is that something that sounds well for you? Does this fit some of the objectives that you've got for yourself? And then from that point forward, if they feel comfortable in proceeding, get them to commit. And there's a letter of intent or a letter of commitment that should be signed. And from that point forward, you know that you've secured some capital to go out shopping. And that's the right way to approach this, is following kind of this sequential order. And by doing so, you'll have a lot more success in closing these deals because you've been able to pool this capital. You'll have confidence that you've got money. And more importantly, you'll know exactly what you're able to afford and to shop for, because these guys have committed to you in regards to signing off and saying, Mike, I want to work with you. Here's the pen. Here's the signature. Let's proceed accordingly. And now I have a lot more confidence that once I find a project that fits, I can reach out to my partner and feel way, way better that this thing is going to get done. Okay. So these are just some of the steps and some of the tips that I wanted to provide everybody. This is kind of the key things that you want to ask as part of your presentation. And trust me, if you follow this accordingly and go through these steps, you'll have a lot more success in this fashion versus just trying to go out and pitch the deal. Okay. So as we wrap up today's session, I know it's gone by really, really fast. I'm just going to kind of conclude on a few key things. Okay. So to start off with, joint venture partners, they are absolutely everywhere, guys. And again, let people know what you're doing. Tell people what you are, what you're doing and who you are, and a little bit about all of those things. Be an active networker. And so we talked about focusing on your inner circle, your referrals, and then your outer circle. My recommendation is use all three. Get involved, get everybody involved, and just be a power networker out there to let people know what you're doing. You'll have so much more success by doing it that way. Okay. And the more importantly is know the qualities you are looking for in a joint venture partner. And that is real estate expert and money partner. What is important to you? And what is the criteria you're looking for from the other side? And making sure that you've documented it, write it down. Take a second to write down your ideal investment partner, be it real estate expert or money partner, and look for those people. Okay. Focus on the money partner's needs and be honest with yourself. Can you accomplish what's being asked of you? Again, desperation can make you make some really bad decisions. If you are committing that you're going to make a 30% return, but in your heart of heart can't do it, you're going to disappoint them, and it's going to be a very uncomfortable relationship. So be honest with yourself. And what you're looking for are good, solid relationships, which not only are going to last for the next 2 to 3 years, hopefully for 10 to 20 years, where you can repurpose that cash over and over again to do future deals together. Okay. Again, it's not about you, Mr. Real Estate Expert. And I point to myself as well. It's about we. How do we work closer together? How do we have success together? How do we collaborate and bring those resources together to make this a harmonious relationship where we're both winning? Okay. And then my bit of advice, and like I said, this is based on my opinion, have the money first, get your capital secured. It will make your life so much easier once you've got capital available, because at the end of the day, you'll be able to know what you're able to afford, what you're able to buy, and then you can do that confidently. And more importantly, you can spend the time doing the things that you need to do, which is get your financing done, get your due diligence done on the property versus scrambling, trying to get your capital raise completed. Okay. So with that being said, that is tonight's session. I hope you guys kind of enjoyed it. And again, there's a lot kind of to discuss. So again, for those that have not had the opportunity to watch the previous session, I highly encourage you guys to watch the previous session. The best way you're going to get the most value out of our investor series is following through each and every single step. Okay. So with that, tomorrow's session, we are going to continue with our series. And tomorrow we're going to be talking about structuring your joint venture partnership and what you're looking for in a partner. So at the end of it, you are the real estate expert, right? So for those that have been doing this a long time or have attempted to get into raising capital and are struggling talking about the whole 50-50 split, and you've got partners that are struggling with that, I highly encourage you to bring your money partners onto tomorrow's session as we explain that one in a lot more detail. Okay. Have them join us. This may help you guys out in regards to securing some of the capital that you're looking for yourselves. Okay. So again, another great session starts tomorrow, 4 p.m. Pacific Standard Time. So we hope to see kind of everybody there. And as we wrap up, if you haven't had the opportunity, do me a small little favor. Please subscribe to our YouTube channel yet again. Again, we really appreciate all your continued support on Savvy Investor on our Facebook page, and we hope to have that same type of support on our YouTube channel as well. So again, thanks guys for watching, and we look forward to seeing you at our upcoming session, which is tomorrow, 4 p.m. Pacific Standard Time. Have a wonderful evening, guys. Bye now.